G'day legends and welcome back to another video. In today's video we are taking a deep dive into the macro and the short term, discussing why we believe Bitcoin is looking horrendous here and why it could be primed for the next leg downward. We're going to be discussing the weekly charts, going over a variety of key levels you need to be paying attention to, how the short term is developing, and the exact trigger point we are watching to validate the beginning of the next leg down to 100 to 102,000. We're going to be going over the short term levels in extensive detail, not only discussing what needs to happen for that continued correction, but what will need to happen for the buyers to regain control. And we'll be discussing the total cryptocurrency market cap as it is currently dropping below a major point of weekly support, and of course the altcoin market cap as well. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you could do that by clicking the pinned comment of the free channel, contacting our admin, or checking out these links. Let's go ahead, guys, and jump into the content. So over the past 24 hours, we have seen a fair amount of volatility for Bitcoin, with a massive rally upward into that 114,000 level. That was that major weekly downtrending resistance we can see, spanning back essentially since the 6th of October, that prior all-time high, and we have since rejected from that level, coming all the way back down into this sell-side liquidity support level at around that 108 to 107,000 region, and since then we have been more or less pushing sideways. Now, with this rally toward the upside being as a likely result of the anticipated Federal Reserve press conference in regards to the integration of digital assets in the traditional finance system, the meeting itself did not amount to much positive for Bitcoin. In fact, it didn't really talk about Bitcoin at all, which resulted in the market then pulling back. So with this rally in anticipation, there was basically a null event, and then we saw the market come back into this base of support. This level we are currently testing is essentially going to be the line in the sand, defending Bitcoin from the potential next leg downwards. So if we're looking for the beginning of the next drop into the next high time frame support, which is sitting at 100 to 98,000. This level we are currently challenging, the 107,000 support, is the level we need to maintain above, because if we drop below, that is going to result in negative momentum shifts and the loss of key structural levels of support, facilitating a low historical resistance range being activated, and of course the price entering that range, which will enable a sharp decline in the price towards that point of support. So a lot to discuss today, guys. We'll come back to all this in a second. Starting on the market data, 24-hour volume down 12%. Again, the market has been pushing sideways a little bit over here. Liquidations actually still very high, 531 million, 402 million coming from longs, 128 million coming from shorts. This is down 34% over the past 24 hours. Again, looking at the 24 hours of price action, sideways price action, but still very choppy. Just looking at the large hourly wicks over here, below these key points of liquidity, which is resulting all those long liquidations, and of course pushing back up into the 50 EMA, resulting in a small amount of short liquidation. So although not much is happening from an initial face perspective, an initial look at it, it does look like it's moving sideways. There's actually a lot happening behind the scenes over here at these points of support, because they are very, very important. Moving over to the DXY, the DXY has come up to retest, or come down to retest this major macro uptrend. Again, this is the monthly trend we have been in essentially since 2014. If we drop below here, expect corrections 90 89, etc., etc. While we hold above this level, there is a chance for a bounce. Before that bounce to actually develop into a stronger continuation upwards, the key level we need to break above is going to be that level at 100. So that 100 point we'll need to break for the DXY to then rally back into the midline, 103, 104. And of course, if we are able to maintain above this uptrend, the risk of further downtrends begin to slightly diminish. Looking at the S&P 500, we have seen some bearish signs on the weekly, of course. We've created a local top here at 6,800. We've had our first weakening positive momentum signal go off on the market side of B for 2025. This is a sign of exhaustion at this high after a strong rally. If we're looking at the daily chart, we have broken below the uptrend here, but we've been able to we've managed to hold on that uptrend, which is initially a good sign. However, until we break back above 6,800, this is still going to be a presumed local top, and we can see already over here the price is failing to clear that level just on the short term. If we drop below the 50 EMA, I think that is going to be a very clear sign we are entering a downtrend. So watch out for that, guys. Let's go ahead and jump into the rest of it. We'll come back in just a second to discuss the upcoming news events and economic data. But before we get into all of that and Bitcoin's analysis, go ahead and sign up to BitGet, BitUnix, and BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making this content, and you'll be trading on exchanges I use and I trust. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump right back into a really quickly upcoming economic news. We have got on the 24th, so tomorrow night at 10:30 p.m. Australia time, which is around about 36 and a half hours from now. By the time you're watching this video, around 35 and a half hours, we have got the inflation data coming out. This is going to be very, very important. As we know, the Federal Reserve has been dropping rates or been pushing to drop rates to stimulate the job market, but not so much that inflation starts to rise. And of course, we had the prior interest rate reduction happen a couple of weeks back, and we've yet to see how the economy has reacted to that in terms of inflation data. This will be the first bit of inflation data we have seen since the interest rate reduction. So if this comes out higher than anticipated, the probabilities for interest rate drops to occur in 10 days or 5 days or 6 days, whatever the hell it is, the 30th of October, will dramatically decrease, and the market will take that as a strong negative sign, and we will likely see further corrections. If the inflation data comes out very good, the probabilities of rate cuts remain very high, and the market will likely bounce moving into that, or potentially bounce on that rate decision. So I think the next 24 hours is going to set the tone for the risk asset market moving into interest rates, and potentially could confirm the downtrend we have been in is going to continue, or maybe even give the buyers the strength, the catalyst they need to actually potentially come up and reverse the price action. So pay very close attention to that. Let's go ahead and jump into the chart. So Bitcoin short term, first and foremost, let's identify the key levels. Currently, Bitcoin is in a downtrend. We have been in a downtrend for quite some time now, since the 6th of October. Of course, the 6th of October is a very interesting date. According to the 1064-day bar theorem, the 6th of October was going to be the top for Bitcoin based on a weekly pivot, based on the 2011 to 13, 15 to 18, 20 to 21, and current bull market cycle. That average amount of days in all of those cycles were 1,064 from absolute bottoms to absolute tops. So according to the 1,064 day bar theory, the top is in. Now, whether or not that will continue to be the case, or whether or not we break the 1,064 day bar theory, is something we'll have to wait and see, because of course this is not a predictive model. It is diagnostic. It is a cycle. It is based on cycle trading. It's diagnostic by nature. We can't use it to infer what will happen or how it's going to develop. We can only assess it and review it as it is happening. So the 6th of October is still going to be a presumed macro top for now, and it is a local top at the very least. As you know, we turned bearish up around here. We had these consecutive lower highs, moving into a high time frame point of support, which we broke below, causing weekly deviation, resulting in a steep liquidation and cascade into these lows. Now, of course, this was perpetuated by the tariff news, but that correction had already moved from around 126 to 116 prior to that news, and the market has not recovered since. We've been pushing upwards, creating lower highs along the way, but this overall downtrend is still very much in play. So the questions are, when will Bitcoin start the next leg down, the next segment of this downtrend lower, or what will need to happen for the buyers to fully reclaim control and reverse the price? So let's start on the bullish case scenario. We talked about how catalysts can move the price. Of course, inflation data and interest rate data can act as a catalyst to move the price upwards. If we see very good inflation data, if we see that develop into an interest reduction, that could be the catalyst we need to reverse the price. That is something we have to watch. But from a purely technical and a structural perspective, for Bitcoin to turn bullish again on the weekly chart, we need to see two things. We need to see a breakout of this weekly downtrend, which will be the end of the trend, and we need to see the price create a new lower, we need to see the price break through the most recent lower high. That was 116. It is now 113.4 to 114. So this was the lower high we had to break. We have now created a new one. This is now the one we need to break above for Bitcoin to facilitate stronger continuations upwards. So while we remain below this lower high, we are still going to be in this downtrend, and the risk of steeper corrections are still in play. Now, what needs to happen for Bitcoin to trigger this next leg down and move into the next support, which if we look in the daily chart, that next level of support is sitting right over here, that sell side liquidity point, 98 to 100,000. Look at the VRPV, we can see already a massive drop off below 103 on the horizontal level into that 98,000, with a massive gap in the VRPV, suggesting that below 103, we will see significant surges of bearish volatility toward the downside to reach at least 100 to 98,000. So what will need to happen to kick off that move? To kick off that move, we will need to see the momentum that has been developing slightly upwards during this period of more or less downward but sideways consolidation. We need to see that break back down, meaning this RSI uptrend here will need to be lost. If we lose this RSI uptrend, it is very likely we are going to be dropping through this 103 support and into 98 to 100,000 to fill that high time frame volume gap at 98 to 100,000. Now, what will need to occur for this RSI to break down? That is where we come back to this major daily support. This daily support level we need to break. Remember, this is a support level we've been holding since the 1st of September. So September, October, nearly 2 months of support. Breaking below this level will result in this RSI break, the negative momentum shift, which will give the market the bearish volatility it needs to push lower, likely into the sell side liquidity point, into the low historical resistance range on the VRPV, and facilitating a correction into the high time frame sell side liquidity. That is what we're watching for the bearish case. Until that happens, the potential for sideways chop to develop from here back to the 50, back to the trend line, is very much possible while we await the interest rate data and inflation data. Of course, like we mentioned already, the inflation and interest rate data is going to act as a potential catalyst to validate either one of these directional moves. But of course, we need to understand what would happen if we break below here and what needs to happen to actually turn bullish again. So bearish until the trend ends. Let's go to the weekly chart. If we take a look at the weekly chart, we can see the consequences of the shorter time frame moves, and we can talk about what impact they potentially could have on the macro. So when we look at the weekly chart, it's very clear this was a top. Now, was it the macro top? And I think a lot of people like to use the word macro top in reference to the 4-year cycle, as in like this was a macro top, this was a macro top, this is a potential macro top before you see a 365-day downtrend. I think it's good to detach the word top from the 4-year cycle when we're looking at something like a daily and a weekly chart. The reality is this was a top, this was a local top, this was a local top. This, of course, also was a local top, because from a structural perspective, no matter how we look at this and say, well, was this a top on the macro? Was this a top not? The reality is this was a deviation set up. And the moment we dropped below here in the weekly chart, the moment we lost 120,000, the probabilities were significantly in favor of corrections lower, and they still are in favor of continuations, potentially as low as the 50 EMA and the Gaussian channel upper band. And guess where those levels sit? Those levels sit exactly at 98 to 100,000. To show you on a horizontal scale here, if we draw in that sell side liquidity box, 98 to 100,000, you can see right there, the Gaussian channel upper band and 50 may sit right on that level. So that is a realistic target for Bitcoin. If we're looking at the weekly perspective, we can see the symmetrical triangle pattern broke toward the downside. This is a year-long pattern of momentum here on the RSI. We have broken that downwards, increases the likelihood for a continuation down. If we're looking at the uptrend through the entirety of the bull run, remember the bull run started over here, the uptrend through the entirety of the bull run, we have held above this horizontal level on the RSI, retesting it numerous times. Every single time we have retested it, we have seen macro reversals back upwards after these extended pullbacks. So we are in this pullback phase. The question is, are we going to see a bounce at the 50 EMA and then continue upwards again, because it's very likely we reach that? Or are we going to break the 50 EMA and Gaussian channel upper band, lose this bull market base of support in terms of the RSI, and enter what you would consider a traditional bear market according to the 4-year cycle? Because remember, if we look at the weekly chart on the 4-year cycle, the loss of the Gaussian channel upper band and 50 EMA historically has been the trigger for us entering an extended multi-month pullback. So there is some patterns or some similarities developing this time around. And not now, a lot of people are saying, well, Whale, there are no top signals showing. I want to make it very clear. The cycle has been the same in terms of the dates, but in terms of the way the price has moved, this cycle has been incredibly different. Now, the reason that is the case is because of how much external news we have had throughout this period. We had periods of significant volatility, followed by periods of significant reductions in volatility and drawdowns, followed by periods of volatility, followed by periods of significant reductions. We've had this compression, expansion cycle, where in prior cycles, we just had more parabolic movements. This massively alters the way these historical top signal indicators develop, as those historical top signal indicators are based on volatility and they are based on moving averages. So when we see the price behave in a different manner, a manner where there is a less parabolic price action and more consolidation, compression, and expansion, those moving average based indicators are going to be reacting slightly differently, and they're going to show different things at this particular phase in the cycle. So they could have been good in the past for the way the price was moving, because the price moved in similar manners, but this cycle has moved in different manners, and therefore maybe they should be taken with less significance. Now, again, I don't want to come across like saying this is it, we're going down forever, because it's not the case. The market moves up, the market moves down, the market moves up, the market moves down. That is just normal market movements. But when we're looking at macro signals, when we're looking at how the price action has historically played out, we can identify specific levels on the chart that hold a little bit more significance, which can increase or decrease the probabilities of moves occurring greater than other levels of significance. And again, The 50 EMA and Gaussian channel are going to be those levels on the weekly that we do need to pay extra special attention to, and it is 44 level on the RSI as well. So that is the weekly chart, guys. That is what we're watching, and of course the short-term price action, we are expecting a little bit of uncertainty moving into the next few days. Of course, we do have a VRPV gap over here at around 109,000. We could see the price come up, touch that again, then come back down. But all in all, I'm not trying to predict too much what is going to happen here because we do have the upcoming inflation data, which is going to throw a bit of a spanner in the works in terms of how the price moves. Anytime we move into news events, the market does become naturally a little bit more emotional. Let's quickly sum up the video, guys, on the total cryptocurrency market cap. Now, this is a bad sign we are watching for the next 4 days. In 4 days' time, we have the weekly candle close. We've talked about this a lot on this channel. We turned bearish on the total cryptocurrency market cap upon the failed breakout of 4.17. This was a deviation from range. A deviation from range with negative momentum over here, bearish divergence, signifies a reversal. That is a classic reversal setup, okay? In terms of when we're looking at the RSI and the price action, when we see deviations from ranges and we see the RSI have negative momentum, it's a classic reversal setup. It's a great scalp trading reversal setup, but it's also applicable to higher time frames. Generally, when that happens, we see mean reversion. Mean reversion usually takes place into the 50 EMA, sometimes the 200 moving average, depending on how overextended the price is. In terms of this, the 50 EMA is a very logical target that is still sitting around 3.3 trillion. Of course, breaking below the prior weekly range high, meaning we close a candle below 3.65 trillion, will likely confirm we are going to see lower moves. If not, it does confirm this was a local top. So either way, it is not looking fantastic. The only way this chart recovers is if we see good inflation data, we see Bitcoin use that inflation data as a catalyst to break above 114. And if we do that, the entire outlook of the market is going to change. The tone is going to change. The potential for pushes back to all-time highs are going to be reality. But if we do not do that, the longer we go in this downtrend, the more resistances we start adding above us, the longer it takes for orders to, the longer orders have to set up above us to add layers and layers of resistance, which makes it even harder for the price to push up. So thank you for tuning in, guys. Have a fantastic rest of your day. I'll catch you guys all in our video tomorrow. I'll see you all then. Bye.